Welcome back. This is Laura McGee with Leave Strong Divorce Services. Next, we're going to work on filling out the FL-142, which is the Schedule of Assets and Debts. So here you are back on the Forms page and scroll down to the FL-142, and after you've looked at this video, go to the Fill Online button. This is going to take you to PDF Filler, and you will put in your name and your email to get yourself started. This form is going to be delivered directly to my inbox. And what you should know about this form is it operates like a table of contents. Okay, I'm going to hit got it. There we go. Let's go. Okay, so it operates like a table of contents. Take a look up here, top of the right-hand corner of the screen, and make sure that you realize that this form will only allow you to list all of your assets and your debts. All of the documents that support the values you came up with, you need to scan to your spouse and copy me, or bring 3 copies with you, one for you, one for your spouse, and one for me when you come in for the mediation session and you're prepared to actually exchange your financial disclosures. So like the other forms, we'll start up here, put your name in here, and you're self-represented, so you put your name here, and you can put your phone number in here if you like. It's always ease of reference if I do have a phone number, but it's not required. As before, you are a self-represented litigant, so you'll fill that in here. And we are not exchanging this form with the court. It's going to be a private document. See this up here? This form should not be filed with the court. So this is going to be exchanged. So all of this information is what you have collected and your spouse has collected and you're exchanging. Again, we're County of San Diego. And we've been working with the presumption that husband's petitioner, so we'll just do that again, and the respondent spouse name will go here. So each of you can fill this form out. There's 2 ways of doing it. Sometimes couples sit down together and they each fill one out, both the petitioner and the respondent, but what they do is they make them duplicates of one another, exactly the same. If you run your accounts together and all the passwords and everything are completely transparent and that's an option for you, feel free to do that. If you only have your own information available, fill out everything that you know and what you believe might be the case in terms of the other party's assets, and we'll work on it together from there. So again, you'll put your case number in. If you're filing in 2018, it'll start with an 18 and have an FL for family law, 6 digits, and the name of the court. So you'll come down here. The very first section is real estate. So if you do not own any real estate, you have no interest in any real estate whatsoever, you would type in none. And the reason you would type in none is we want to be sure that you didn't just miss this section of the form. You're actually saying specifically none, I have no real estate whatsoever. So let's assume there is real estate. Let's assume that you live at 123 Jefferson Street here in Carlsbad and that you own a home. You'll type this in here, and you're going to let us know whether you have a claim for separate property. The next column over says SEP prop. That means, are you claiming that a portion of this property belongs to you separately? And this form has a little, let's just call it a small annoyance. Hit the enter button a couple times and get it to line up with your Jefferson Street address. So in this case, let's assume for a minute that P petitioner has a claim for separate property, and this was actually acquired, let's say, prior to the marriage. So you can either put in prior to the marriage, or you can put in the date that it was, if you happen to know the exact date that you purchased the property. And again, now we're going to have to come up with, let's hit the enter button a few more times just as a reminder. Now you're going to put in what's the value of the property. Now this is often in dispute, and the question is what's the value and when are we coming up with the value? When you're negotiating in a marital settlement arrangement, if you're selling the property, of course, that'll determine the value of the property. If you're negotiating an asset swap, one of you wants to keep the property, then we're going to have to come up with a value, and there's several ways of doing this. If you agree, go ahead and put in the agreed upon value. Let's assume for these purposes you agree the property is worth $800,000. It's not in dispute. If there is dispute, one of you went on Zillow, one of you went to your friend who's a real estate agent, one of you talked to the appraiser who happens to live down the street, and you don't agree on the value, then we're going to decide how will we come up with this value, because we have to have something to document it. I can help you either get a comparative market analysis from an independent realtor, I can also refer you to an appraiser should that be necessary. We'll discuss the various methods of coming up with an agreed upon value if it's an asset that's going to be retained by one of the parties. So next we go to the next column here. Again, you're going to want to get it to line up, and the amount that's owed, any kind of encumbrance. So in this case, we assume that petitioner husband says he has a $100,000 property claim, that he came to the marriage, sold the property and put the first $100,000 into it as a down payment, and he wants that money back. So we'll put that down, and then we'll put premarital contribution, he's looking for that as a separate property. And then under that, we'll also put that there's a mortgage. So let's say there's $580,000 owed on this property right now. And that document is going to be the actual mortgage statement. It's going to be one of the attachments. And then let's assume that you also have a HELOC, a home equity line of credit, for maybe another $30,000. So this fully discloses what at least petitioner in this case is saying is owed on this home. And if there's any disagreement, that'll be disclosed in the respondent's exact same document. Okay? So if you have any other property at all, you would also list it here. So for example, maybe you have a timeshare, maybe you have a rental property, maybe you even have an interest in a property that that you co-own with your parents or something like that. It'll all be listed here, and you'll follow the same procedure right across the page that we just did for the Jefferson Street property. Okay, so let's move on. Household furnishings. So with household furnishings, if you really want to start an argument, start listing all your furniture and what you each think it's worth. So here's my recommendation to not start an argument. If you do want to do an furniture swap, in terms of allocating who gets what in the house, make your own separate private list, toss a coin, and start picking who gets what, and that'll be your allocation. You don't really need to list it here. If, however, say you have a grand piano, say you have a grandfather clock, or you have some expensive sporting equipment, somebody's got $6,000 in cycling stuff, so list the kinds of things here that you want valued. Again, go across and indicate what you think they're worth. You also want to indicate whether they're during the marriage. So let's assume it was acquired during the marriage. You can put during the marriage, or you can put a date, and then go across and put how much you think that grand piano is, a $30,000 grand piano, and you want to figure out how you're going to allocate that, and you don't have any debt on it, so you would just put a 0 in that column. Okay, so if it's something very specific you want called out and you want allocated in your mediation, this is where you'll be listing it. If it's just furniture that you're going to be distributing between the two of you, then just create your own separate list, and we can talk about it further in the mediation. So next, jewelry, antiques, art, coin collections. So most times when it's jewelry specifically, they are gifts, and gifts are separate property. So usually you're not going to be, you can list it here, there's a separate property column, but usually what clients do is simply agree that, whatever jewelry I gave you during the marriage is still yours. If you do want to call it out, you might need a larger section than this and have to add a page on. Typically what I have clients put down here is something that needs to be appraised or valued and is going to be distributed. So if you have something specific, maybe you have a piece of art that you bought at some art auction and you want the art appraised and you want it valued and distributed. So let's just say, art. And then we'll give it whatever you think the value is. It might need an appraisal. Again, you'll put during the marriage. And let's give it a value. Let's say somebody thinks it's worth $20,000 and you want that distributed. Okay? And there's no debt on it. We'll put the 0 over there as well. So that's how you do those first sections. Let's go to the second page. It's a 4-page document. So for vehicles, Kelley Blue Book is the method of coming up with the value. Let's assume that the husband is driving a 2014 BMW 330i. And so I need to know year, make, model of your vehicle. And I want to know how much mileage is on it because we need to look it up in Kelley Blue Book. So let's say you've got 38,000 miles on the car. And I want to know who's driving it, husband or wife. And you may not expect to distribute it that way, but I just want to know who's driving it. So in this case, maybe don't put it in the separate property column, but just put in mark beside the actual vehicle who's driving it for me, just so I know. So we'll just put here husband, wife, whatever. Let's assume that you didn't own this before you got married, that you acquired it during the marriage. Hit that enter button a few times so it lines up nicely, and just put, during the marriage, or if you know the specific date, that's great too. And then let's go over and come up with the Kelley Blue Book current fair market value. You can do that yourselves, or we can do it here in my office. Let's assume in this case, the Kelley Blue Book came up with a $21,000 value, and that there is a car loan on it, and that loan is for $18,000. So that will go there. Okay, and then even though husband's filling this out and he is the petitioner, he still puts wife's vehicle. So you'll come back over here, and we're going to say that she has a 2012 Ford Taurus, and it has, let's say, 68,000 miles on it, and that she's the one driving it. Also purchased during the marriage, and that we're going to say that this one is worth, let's say, $8,500 according to Kelley Blue Book, but there's no loan on it, so that's zero. So although in this instance it might look like husband's driving the nicer vehicle, actually at this point, depending on what we're going to do with the assets, she has greater equity in the vehicle, as you can see from this form. So the Kelley Blue Book statements will form an attachment. Let's go to the banking. There are savings accounts to be listed, checking accounts, and or credit unions. For some reason, this form has been around for a long time, and it seems to think that credit unions should be listed separately. So decide what you have. Start with your savings accounts. For every banking institution, I need the name of the institution. Let's assume Chase, and that there's a joint savings account. And I need the last four digits. I don't need your whole bank account, just for your privacy. That's ending in 1234, we'll assume that. And that then we need to go and find out how much is in there. Now, if it's a savings account, well, of course, if it's during the marriage as well. But if it's a savings account, just if it's used as a true savings account, it probably doesn't have a big changing balance. Take a look at the date of separation. What was the balance at the date of separation? If you've not yet determined the date of separation, it's something we'll have to work on. So let's assume that there's only $500 in there as of the date of separation in the joint savings account, and that there's no home equity, there's no, lending against that. That would just be zero. So if each of you have a savings account, you come back over here and you'll list them, each of them here, husband and wife, whoever's name is on the account, okay? And again, what are the values as of the date of separation? I want to know what was in the community at that time. Checking accounts, same idea. Let's assume there's a Chase checking account, and that this is joint, and it's, account number, last four digits again. And then again, most checking accounts are going to be something that was established during the marriage. So we're not going to worry about the date it was established. You could put during the marriage if you like, just for clarity's sake. And what is in the account typically at the end of each month? So if this is an account that all your bills run out of, your mortgage comes out of here, and all your SDG&E, etc., then what is your average ending balance in this account? Let's assume every month this account gets drained down to $800. Then I want to just see $800 there, because there's no point in arguing where the money went when it historically is drained out each month. And assuming you don't have a line of credit, it's just a zero lending against it. Now you might also have your own accounts, not just the joint. So you'll put both husband and wife's checking account. So if you each have an account at Chase, for example, just put husband and then the last four digits of each account. If you don't know how much is in your spouse's account, yours you'll know. But if you don't know how much is in your spouse's account, then you will simply put over here, let's say for husband, he knows how much is in the account. We're going to give him, he's got, in his personal checking account, he's got $10,000 sitting in there. That's his monthly ending balance, typically as of date of separation. And we'll say wife, he doesn't know, so we'll put to be determined TBD. It means he doesn't know how much she keeps in her personal account, and that's something he's going to be requesting information on in the disclosure process. Okay, so let's just hit the next button, and we're going to go to the credit unions. If you have any, it's going to be exactly the same as the rest of the banking. Cash is going to be you disclosing whether you keep cash on hand. Maybe you have a safe at home, maybe you keep it in your mattress, but if you've got some cash, you do have to disclose it. Okay, so this is where you would disclose it, how much, and where it is, what's the location, whether it's a safety deposit box, maybe a safe at home. The tax refund is really, if you're at the time of year where you've already filed taxes and you're anticipating a tax refund, then you'll just put in 2018, for example, tax refund, and how, of course, it's presumably was during the marriage, so you'll just go over, put in during the marriage, and how much you expect it is. So say this year, you've already done your taxes, we've got all the way to the end of the year, and you're saying, I'm expecting a $6,500 tax refund. That's money waiting to come back for the period of time when you were married, okay? So life insurance is an interesting one too. So this is only an asset if it has cash surrender value. You may have life insurance that's term, and I do want to know about that. It's not an asset. So include it in the information that you exchange. I need full policy number. So let's assume that there is a whole life policy. So we're going to say Fidelity Life Insurance. And we're going to say with a cash surrender value on husband's life. And the family pays for this policy. It was acquired during the marriage. So again, we'll say during the marriage. And then let's say that it's got $30,000 sitting in it. Now, it might only have a $30,000 cash surrender value right now, but it might be like $1 million policy on his life. And the reason we want to know that is if there is going to be spousal or child support, and it's important to protect the flow of that future income against the loss of the spouse who's paying it, we'll want to know how much insurance is in place and talk about whether somebody should be made an irrevocable beneficiary of the policy. So when we're discussing life insurance, we're discussing, is there an asset? If there is, what's its value? And if there's no asset, but there is life insurance, what would be an appropriate level of coverage? Okay, so keep that in mind when you're doing this disclosure. Okay, let's go to page 3. And we're still in assets, the stock, bond, secured notes, mutual funds. So this is anything you have in the market that is not in your retirement. So say you have an E-Trade account. And you've got an E-Trade account, and that's where you have mutual funds, and you have some specific stock that you trade. So just put E-Trade account. Again, I need last 4 digits of the account, and then whose name it's in. So in this case, I'm going to say name of husband because we've been doing this form as though it was his form, and it's not something that he acquired before the marriage. So we put the date just during the marriage again. Okay. And then what's the gross fair market value? Again, you have a rotating value or a market value, meaning it's in motion because the market's in motion, but we want to know what was its value as of the date of separation. If you have not determined your date of separation, something we'll have to discuss. So if you say that we already separated on June 1, go get the statement for May 31. And in this case, we'll assume that he's got $25,000 in his E-Trade account, okay? And that he hasn't borrowed against it. Any encumbrance is 0, okay? If wife also has an account, so say she's got her own account, she's got her E-Trade account, and he doesn't know what's in it exactly, he'll put the same information, but it'll put to be determined once again if he doesn't know what's in there. If you're working together, then you can provide this information to each other in advance, and you can fill it out a little more accurately. So retirement, we've got 2 retirement sections, 12 and 13. If you've got a pension, it's going to go in 12. And if you have a profit sharing, such as a 401k or an annuity or an IRA, you're going to put it here in 13. So let's assume there's a retirement. Let's say that Dad's a school teacher. He works as a teacher, so he has CalSTRS. And he doesn't know exactly how much. Let's say CalSTRS in name of husband or name of petitioner. Either one is fine. And there's no way you can know what it's worth. You can look up your contributions, but you would need an actuary to know what it's worth because nobody knows when they're going to pass away. So that's why we don't really know what it's worth without making some actuarial guesstimates. But let's say he started teaching during the marriage. There's no separate property claim. Then the amount is going to be determined. Okay, his statement will disclose the value of contributions, but nobody knows its exact value is what I'm saying. And you cannot borrow against a pension, so that's always 0. And let's say wife works for a corporation. She has a 401k with, let's say, Viasat. She works here locally in Carlsbad, and she's it's in her name, and we want the last 4 digits. The CalSTRS won't usually have digits, it's just going to have the name of the person, but this one's going to have an account number. So we want the last 4 digits of that one. And let's say she started working at Viasat before she met her husband, so part of her claim is a separate property claim, and she's going to put a to be determined in here under the Viasat 401k. To be determined, yeah. But she'll put to be determined under the separate property claim, or she can put her an R for respondent, pardon me, saying that she's got a claim, but it was acquired, it started to be acquired prior to marriage, so we'll put prior to marriage. And in this case, it'd be nice if we had a date. So let's assume that they were married in 2001, and she started working there in 1998. So this started in 1998. So some of this is a premarital asset, and some of it belongs to the community, okay? But she's taken out a 401k loan, and she's got a $8,000 401k loan that she has to pay back. So that's going to be on the documents as well. So we probably know the value of the actual 401k, we just don't know which portion belongs to the community, and that way we've marked to be determined so we can look at it and come up with a value when we're doing our final assessment of the values, okay? Next, accounts receivable and unsecured notes. So does anybody owe you money? So say you loan money to your sister. So a husband loaned money to his sister because she was going through her own divorce, and he loaned her money. So we're just going to put, we're going to call sister, we'll just say husband's sister. And he didn't bother, of course, to get a note. And so this was all during the marriage, and he needs to be paid back because it belonged to the community. So he needs to be paid back the amount of the loan, and that's $14,000 he loaned his sister. And so that's an account receivable, okay, something like that where it's not secured. Let's go to partnerships and other business interests, number 15. So if you have a business or an interest in a business, you're going to attach, as it says right here, your Schedule C from your business, which lists your assets, your income and your expenses, but also your K1. And there might need to be a business valuation. So let's, in this situation, say that Dad, in addition to being a teacher, he's a tutor, and he has a business called, Math Man Tutoring. So Math Man Tutoring is Dad's private DBA, doing business as, he's Mr. I forgot his name we gave him. I don't know if we gave him a name anyway. He's got Math Man Tutoring Company, and this is his private DBA, doing business as, and it's sole proprietorship, but it started during the marriage, so it has value. So again, we're going to indicate that it started during the marriage, and he may not know what it's worth, might to be determined, or he might say, I know what this is worth because basically all it is a computer and some notepads because I'm a service provider. That's the nature of my business, and it doesn't have assets to speak of. So he might be putting down to be determined, and he might say it's really worth $1,500, the value of my website and my computer, because in fact, if I'm not Math Man, this business, I can't sell it to somebody else to be Math Man. You may have a business that is resellable, and you might actually need a business valuation. If you do need a business valuation, we'll discuss that here, and I can set you up with a referral to somebody who can help you with that. So other assets, what would be other? Other is typically, very high-end sporting equipment that you might want valued. It might be something that's international property, something that's out of the country, and you've got a home that you inherited somehow over in Jordan, for example. So anything that doesn't fit in one of these categories will still be listed here. And because we do also list separate property, even if you're claiming it's entirely your asset, something you owned as through gift or inheritance or prior to the marriage, you still list it so that if there's any dispute about ownership, it can be evaluated together during this mediation process. Okay, the fourth page, let's get to the fourth page, there we go. So the fourth page are your debts. Now, if you have student loans, either Parent Plus student loans that you're going to have to pay back, or your own student loans, you'll list them here. So let's assume that you have a Navient student loan, and the name of husband, because he went back and got his master's so he can get his teaching certificate. And so let's say Navient student loan, and a name of husband. Okay. And student loans are typically considered to be separate property, but there's some law on that you may have to get some advice about. So at this point, he doesn't want to call it a separate property. He just wants to put in the total amount and then leave it up for discussion. So he says, yeah, I still owe $22,000 on my student loan. And exactly, so that's up in there. And the date that you incurred it, that was all, let's just say it was all during the marriage. That's when he upgraded himself to get his master's. Okay. So taxes. So if you have back taxes due and owing are not up to date with the IRS or the franchise board, this is where you'll indicate that. Let's just say there's some IRS 2016 back taxes. And there's, you're on a payment plan or something like that, but the total amount you owe is $3,000. And so that will go in there as a debt. And when it was incurred, we'll just put 2016, because let's say it was for the 2016 tax year. Support arrears, that is really if you had a former spouse and you have not been paying all of your child or spousal support. If you're in arrears, that needs to be attached and indicated, but we're not gonna use that. If you have a loan, unsecured loan that's not listed and attached to an asset, you borrowed money from a friend and you owe your sister money back, for example, you'll indicate that here. And credit cards, just like the bank accounts, you need to list every credit card, whose name they're in, and the last 4 digits. So let's say, for example, you have a Chase Visa in name of husband, account ending 5678, or whatever. Then what's the balance? Again, let's go to date of separation. What's the balance as of date of separation? Now, if you pay your credit card off every single month, then just put 0. If you try to pay your credit card off, but it's been mounting debt, and since the date of separation, you have at least $1,000 sitting on your account and growing, then put $1,000 down in credit card debt. Okay. So other debts, it's pretty hard to imagine any other debts, but if you can think of anything else that is not already enumerated here, or if you've just run out of space on the credit card section, for example, put it there. And you will be putting down both your credit card and your spouse's credit cards if you know them. This is supposed to be a form that includes all of your information from the whole marriage. And then you'll come down to the bottom, 27, and it says, how many pages are you attaching? Now, you can't attach them to this particular document because it's coming to me electronically, but you can scan them to your spouse and copy them to me. So if you have 20 pages of banking records and mortgage statements and all the things that support what you've listed above, put 20 pages, and we know we're not missing any of the documentation. Since this form allows you to sign it electronically, date it, put in your name, and electronically sign it, and it'll come to me in my inbox, and I will copy it to your spouse. Okay? So there you have an example of how to complete the FL-142. This is the complete schedule of assets and debts, and I know this is a big project. I do want to mention this. When you start this project, if you're not going to be finishing it all in one swoop, this form will close itself out and it won't save it. So do make sure that you have done all of your homework ahead of time, perhaps working on a hard copy, which I'll provide to you before you go to the online form. So when you're ready to fill it out, you're ready to fill it all out in one shot. If you have any questions, feel free to email me. It's Laura McGee at leavestrong.com. Thank you.